Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2024 question number 7. This is related to above information. This is our question related information. This is 1 2 3 4 5. There are transactions. In that case we must focus to question number 7. Look here, there is a checking of double entries, totally double entries. Look here, VAT control account balance. Ignore the VAT on purchase. There is no purchases, therefore ignore VAT on purchase. Okay, VAT control account balance. Okay, and the debtor control account balance as at 31st January 2024 of Chandra business. VAT control account balance, we must prepare VAT control account, and debtor control account, we must prepare debtor control account balance as at 31st January 2024. This date is month ending. This is the transactions. Look here, there is a January transaction. Look here, this is the following transaction have occurred in business during the month of January. There is a January transaction. We must prepare our entries and VAT control account and debtor control account 31st January 2024. There is a month ending balance. We must include all transaction of January. We to calculation I prepare which accounts? VAT control account. This is the VAT control account. VAT control account. VAT control account. VAT control account and debtor control account. Debtor control account. Debtor control account means trade receivables. Debtor control account. Control account. Account. In that point, I use these information related to sales journal is we must already recorded two transactions. We enter these Amal and Bimal's sales, credit sales. In that point, I use these double entries to include and preparing these accounts. I understand there are two transactions included to sales journal, and there is the double entries of two transaction. This is the credit sale, this is the credit sale. The total of credit sales, what is the double entry? This one and this one. In that point, I already accounted and create double entries of two transactions. Therefore, ignore means I am not finding again the double entries of these transaction. Which transaction? Credit sales. Which? This is the credit sale number 1. We already recorded 354. Look here, 354. This one Amal. This is a credit sale. Number 1 is okay. Okay, number 1 transaction is okay, already entered. And what is the another transaction? Credit sale. Which transaction? This one. Sold goods. Credit Bimal. Question transaction number 4 already done. 590. Look here, 590. This one Bimal. This one is number 4. Look here again, number 4. Number 4 transaction is okay. Number 4 transaction 590 is okay. Already we enter the transaction of 1 and 4, therefore I record this transaction 1 and 4. Okay, 1 and 4 transactions, double entries are there. Trade receivable debit. Trade receivable means debtor control debit, sales credit. We only prepare the VAT control and debtor control. Only we identify debtor control account shots and VAT control shots. In that point, look here, this one, trade receivable debit. Trade receivable means debtor control debit 800. We must debit 800. What is the description? Description means opposite side sales account. I write sales. Are you understand? There is a double entry of 1 and 4 transaction. This one is the amount without VAT transaction, trade receivable debit, therefore I debit to 800. There are no sales account requirements, therefore I miss it. This one, trade receivable debit again 144, say trade receivable debit 144, and credit to, look here, credit to VAT control account, VAT control credit 144, VAT control credit 144. We this write trade receivable, this time VAT control. Okay, already we done transaction number 1 and 4. The remaining transaction must be entered to remaining transaction must be entered to debtor control account and VAT control account. Look here, the PDF transaction number 1 okay, 4 okay, 2 transaction number 2, received a check from Amal to settle total due amount after allowing cash discount 30,000. Received a check from Amal means this Amal. At the Amal is created at the sold goods on credit. This time received a check. Check means cash receiving. From Amal, settle the total due amount. He settled total amount after allowing cash discount. Look here, we go to the sales journal. Amal is there. Look here, Amal. This is Amal. This is the Amal receivable amount. Amount without VAT 300. Okay, VAT amount 54. 354 is total amount. At this time, Amal, look here. This is the Amal point. The trade receivable Amal. Trade receivable Amal. You must collect 354 total amount with VAT from Amal. 354. Ignore the VAT. We must collect biscuit amount. Biscuit amount means without VAT, and VAT amount both 354. At this time there is a discount allowed amount. What is the discount allowed amount? 30,000. This total amount must be settled by Amal. At this time there is a discount allowed. This is the deduction. Discount allowed minus. At this time, after that, we must be collect this amount cash received. What are the double entry of this section? this section. Look here, what is the double entry? This is the summary of this. There is a trade receivable amount Amal 354 with VAT. Discount allowed 30, cash received 324. This time we ignore this amount and transaction created to this amount and this amount. Discount allowed, what is the double entry? 30,000. Look here, discount allowed debit, which amount? 30. Credit to debtor control, credit, 30. This is the double entry of discount allowed. This. After that we collect cash received, cash control debit, cash control credit, cash control debit 324, credit to debtor control, credit 324. At the cash received point we cannot record the VAT amount. At the cash receiving point of debtors we must not focus to VAT amounts. This is the double entry, no entry for VAT. Okay, this is, look here, the double entries we must record. Discount allowed debit, we only focus to this amount, VAT control account and debtor control account. We only identify the debtor control shots and VAT control shots. Look here, there is a entry, discount allowed debit, debtor control credit, debtor control credit 30, debtor control credit 30, discount allowed, again. Look here, cash control debit, okay, debtor control credit 324, debtor control credit, cash. Okay, this is the second transaction we must recorded. The second transaction is okay, cash collection. This one is okay. Third one, look here, sold goods costing 324, sold goods costing 320. Ignore the 320. Why? This is the cost. We ignore the cost. 472 for cash. This is the cash sales, inclusive of 72 VAT. Look here, this is the sales on cash basis, At this time we must focus to schedule. This is the sales amount without VAT. We must add VAT amount. This is the sales amount. This is the selling price without VAT. We add VAT amount and we can get sales price, sales amount with VAT, including VAT, with VAT. We must fulfill this schedule. Look here, the selling price. Look here. Sold goods costing 320. Ignore this. 472. 4 means this is selling price. 472 on cash, inclusive 72,000 VAT. Inclusive means this included. 472 means amount with VAT. Inclusive means this one is included. 472 means with VAT, including, and VAT amount is 72, without VAT is 400. What are the double entries? We use this double entry and this double entry. Look here. Double entries of sales amount. Sales on cash basis, no. Sales credit. Sales credit 400. Debit to on cash basis, no. Cash control debit 400. This is the double entry of without VAT amount. VAT amount, what is the double entry? Sales credit, VAT credit, VAT control credit, VAT control credit 72. Debit to cash control debit 72. This is the enough for recording transaction. Ignore this 472. Look here. We must focus to VAT control shots and data control shots. Look here. Cash control debit. Ignore this. There is no VAT and no data control. Sales credit. Ignore this. Look here. Cash control debit. Ignore this. VAT control credit. VAT credit 72. VAT credit 72. VAT credit 72. Cash. Okay, we already done transaction number 3. Sorry, number 3 is okay. 4 is okay. Number 5. Return goods sold to Bimal for 118, inclusive 18,000 VAT. The cost of these goods was 80. Return of goods sold to Bimal. This is the sales return. No? At the sales return point, we must focus only selling price. We ignore the cost of these goods. Look here. You know, at the sales point, we only focus selling price. Ignore the cost. At the sales return, this is a sales return means opposite side of this. Sales return. This is the only schedule. This is the father, this is the son of this transaction. Son is only schedule the selling price. Therefore, at the sales return point, I focus to selling price. Look here. Return goods sold to Bimal for 118, inclusive of VAT 18,000. This is the selling price. 118. 4 means selling price, inclusive of 18,000 VAT. Look here. This point sales return we must schedule again sales price, sales amount without VAT, and we add VAT amount and we can sales price again, sales amount including VAT. Look here, we must focus to this schedule. What is the amount of sales price? Look here, return of goods sold to Bimal for 118 inclusive VAT. Inclusive means 118,000 amount included VAT. This VAT inclusive means this amount is added to sales price. 118,000 I used to this fulfill 118,000. Why? Including VAT. What is the VAT amount? 18,000. Without VAT, 100,000. What are the double entries? This is a sales return, no? Sales return. I use this transaction double entry. Sales return debit. Sales return debit. Sales return debit 100. Credit to debtor control account. Credit 100. This is the double entry. Sales return debit, debtor control credit. What is the VAT amount? Double entry. Sales return debit, no? VAT debit. VAT control debit. VAT control debit 18,000. Credit to debtor control. Debtor control credit 18,000. Use this transaction. We must focus to which accounts? VAT control account and debtor control account. Look here, this one, sales return debit. There is no sales return account in this requirement. Debtor control account credit 100. Debtor control account credit 100. Debtor control account credit 100. Credit 100. Sales return. Okay. Next one. VAT shorts. VAT control debit. VAT control debit 18. VAT control debit. This is the debtor control. Look here again. Debtor control credit 18. Debtor control credit 18. Debtor control credit 18. Sorry. Debtor control 18. This is the VAT. Okay. There are all transaction we must identified. Okay. 1, 2, 3, 4, 5. Okay. Let's go to the accounts. We can balance this. This time 6, then 216, 8, 1, 9, 2, 9, 1, 198, balance forward, balance carried down. This time this one, this time 944 and 21677 154 400 472 balance forward, balance carried down. 198, okay, 8 debit, okay, 198 and 472. What is the answer? Look here. Answer question number 7. Question number 7. What is the VAT control account balance? VAT control 198 VAT control 198. Sorry, question number 7. 198. This answer 198 VAT control account balance 198, sorry, credit, no, 198 credit balance. Only one answer. Look here, credit balance, credit VAT control 198 credit balance. Look here, 198 credit balance, credit 198 VAT control. This time look here, the debtor control account balance, debit balance 472. Okay, this time 472. Answer is 4 for question number 7. Answer is 4. Okay, let's next 8. Okay, next video question number 8 we must be discussed.